Okay everyone, back again to me and this video, like usually before, I will read some article again. And before I start, don't forget to like, comment and subscribe. This article by Tommy Wilkes, London Reuters. European stock drop on Thursday, tracking falls on Wall Street after Federal Reserve officials said in policy meeting. mean in policy meeting minutes that inflation pressure were not easing and a European Central Bank official warned the outlook had not improved. By 0835 GMT, the euro stock was down 0.13%, while Wall Street futures pointed to a weaker open after the main index closed lower. MSCI broadest index of Asia Pacific share outside Japan lost 0.5%. Stocks have staged a strong rebound in the past 2 months on hopes a peak in the pace of monetary tightening is within sight by the remain vulnerable to central banker warnings that the fight against price pressure is far from over. Federal Reserve officials saw little evidence late last month that U.S. inflation pressure were easing according to the minutes of their July 26 till 27 policy meeting released on Wednesday. While not explicitly hinting at the particular pace of coming rate increase beginning with the September 20 till 21 meeting, the minutes show U.S. central bank policymakers commit to raising rates as high as necessary to tame inflation. ECB board member Isabel Scannable told Reuters in an interview that the Eurozone inflation outlook had not improved since July rate hike, suggesting she favored another late interest rate increase next month even as recession risk hardened. After a very strong run for risk asset thanks to a narrative that we might have seen peak inflation yesterday, but put a stop to that as multiple headlines came through that poured cold water on the prospect that central banks were about to let up on hiking rates, said Deutsche Bank analysts. The latest central bank to hike were the Reserve Bank of New Zealand on Wednesday and the Norwegian bank on Thursday, both raising rates by 50 basis points. Buoyant dollar. The dollar rose toward a 3-week hike after the Fed's minute. The euro slipped 0.1% to 168, while the pound fell back below 1.20%, and $1.20. After the recent rally across risk assets, some fund managers are warning about the outlook. Investors need the hedge urgently. The environment, which has led to his bear market rally, which we did not see being as strong as it has been. It's about to change, said Mohammed Apabai, Citigroup, head of Asia Pacific trading strategies. The Fed has seen monetary condition loosening and is now set to continue with its tightening, and particular it is now set to double the pace of quantitative tightening from the current $47.5 billion to 95 billion starting September 1. The yield on benchmark 10-year Treasury not crossed initially in Asian trade but later retreated to 2.884%. The two-year yield, which rise with trader expectation of higher Fed fund rates, was unchanged at 3.287%. US crude ticket up to 0.3% to 88.540 a barrel. Brent crude rose 0.5% to 94.15 per barrel. Spot gold instead up 0.2% to 1,764.93 per ounce. Okay, that's all from me. Don't forget to like, comment, and subscribe, and see you in the next content video.